Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Hello and welcome to RIA Edge. This is Mark Bruno, Managing Director of the Wealth Management Group at Informa Connect. And we are incredibly excited and delighted to have a very special guest here, a long-time friend, Michael Goodman, who's the founder and president of Wealthstream Advisors here in New York. Michael, thank you so much for taking some time to join us. Appreciate it.
Thank you, Mark. I'm really happy to be here. It's great to connect with you, and I'm looking forward to our time together.
And I think we have a lot to talk about because I know you've been very busy and there has been a lot of activity in the RIA space that we can kind of talk about in some general terms. But I would love for our audience, I don't know how many are familiar with Wealthstream. I got to know you years ago, came through when I was running the legacy Moss Adams benchmarking studies. I know that you're a student of the game, right, as they say, and always participating in industry research, always trying to figure out how your firm compares to other firms, and most importantly, what levers you can pull to drive growth. So I can say firsthand, Michael, I've gotten to know you. I've watched the firm grow. You just crossed the $1 billion mark last year. Congratulations, by the way. You are one of the more thoughtful people I've gotten to know, and I can't wait to kind of get into your strategy around some M&A, but also your organic growth in this discussion here this afternoon. Before we get into too much detail, though, Michael, would you mind just giving a little bit of a history and a brief overview of Wealthstream for our audience, please?
Sure, happy to do so, and thanks for saying those things. The firm is about 25 years old. I say the firm, and that's when I started and got in the business, and the firm's kind of gone through some cycles. Obviously, I started the business from scratch after leaving the accounting world as a CPA, and so I break the sort of the history into a couple of sections, if you will. First was survival, if you will, getting started, right? And then I had a nice sort of solo practice, good lifestyle business. And then from there, very conscious decision to sort of make it into more of a firm, probably just from my experience of working in public accounting, thinking of like a partnership in a firm where you have, professional services model, and the idea of me not being the only advisor. So made a conscious decision, made that change, brought on some more advisors, and tried to grow the firm. And that's been, by far the most rewarding and exciting thing. And now we're kind of a multi-generational. There are 7 other shareholders besides me. So we have multi-generational shareholders. We're looking to increase that in the next 12 months as well. And it's all inside people that own stock in the company. As you said, we're about $1.1 billion, a little over $1.1 billion right now. There's about 22 employees, and there are a little under 400 clients. And we're in New York City.
Excellent. And what is if there is such thing as a typical client, what is the profile of a typical client for Wealthstream?
That can go a lot of different ways when you talk about what your ideal profile is for a client. The most important thing to us is somebody who we can make a difference in their lives. As far as from a business standpoint, we're typically looking for a client somewhere between 2 and 20. That's about the sweet spot for us from an AUM standpoint. I would also say that we have a lot of clients bigger than that and some clients smaller than that too, of course. We work with a lot of entrepreneurs and a lot of business owners. I would say one of the biggest niches that we have is that we work with a lot of people with public company stock and their compensation. That's a bit of a strong niche for us.
Okay, great. Good to know. And I think you've grown quite a bit over the last couple of years here. And I wanted to make sure that we started out just by going through some of the history and the M&A that you've been involved in. When we were talking a little bit earlier, you used the word modest to describe some of the acquisitions that you've done. But I'll leave it to you to offer a little bit more detail. Can you just walk us through the 3 transactions that you've done, and more specifically, why you actually engaged in these deals and what they did for Wealthstream?
Sure, I'd be happy to. I will say that the first deal that we did wasn't one we were looking for. I was in the midst of really focusing on building out the second generation and making sure that I was, not going to hurt the firm by being the primary person here. So we were really focused on having other people start to be able to do business development and really focused on getting that second gen going. And I've always, like you said earlier, been really interested in the profession, love the business of the business. I mean, I love taking care of clients and I still do that, but I've always been fascinated by the business of the business and almost default learning about how things, and I never really just envisioned myself as somebody who was doing a lot of M&A. I was really always more focused on just being the best we could at taking care of our clients and having a great place to work. Then somebody introduced me to somebody who had a small RIA, kind of trying to build it, wasn't getting to the size they wanted to, and they were given an offer they couldn't refuse as far as getting back to the W-2, if you will. And we met, we got along really well. It was a very short, most of these deals take a long time to kind of date and figure it all out, make sure it happens. But we were kind of forced to do this in a quick period of time. And even though it was a very small deal, I got the opportunity to go through all the due diligence elements, right? You go through due diligence,
Sure.
You go through compliance, you go through the legal, and it was a great experience and it worked out really well. And it was a good way for me to get started without kind of a low risk transaction.
Yeah, it's that first one. Doesn't matter how big or how small. It's a brand new world, and we obviously got the chance to work together when I was at Echelon, right before I was at Informa, and it's complicated no matter how small the deal can get. So glad to hear that you got that first one in. And then what drove the second and the third one, and how did the experiences differ as the deals got, whether they were larger or more complex or both?
Yeah, so I would say there were two things that drove us to continue to do M&A. The first was my realization that the firm needs to grow at a certain percentage in order to make sure that there's opportunity for the younger folks. As I said, I was really trying to build out that second gen, and then the third gen we have now. It's just very exciting. So I need to make sure the firm grows at a good enough clip that everybody here feels that there's going to be great opportunities for them to stay here and build their careers here. We don't have any private equity money or anything that's pushing me from an ROI standpoint. So that's not what's driving it. The second thing is I really enjoyed the first transaction. It was a great experience. Not only because the seller was a good person and all, and we had a great experience with the clients, but I really, really enjoyed sort of developing a muscle I didn't really know that I had. And it was just a wonderful, loving the business of the business kind of experience. So we started to really think about, okay, we want to do more of this and we want to do bigger ones because, like I said, this was pretty small. So what is it going to look like? What do we need to do to prepare ourselves? And how do we make ourselves an attractive buyer to the kinds of firms that we're looking to buy?
Yeah, and I definitely want to talk about that in a little bit more detail because we know how complicated, how competitive the M&A market is right now. So I think it's important to get a sense for how a firm like yours, can compete with some of these professional buyers. But one question I do want to make sure we ask, you've gone through 3 different deals. They haven't all been in New York, correct?
The first 2 were, and then the last deal that we just did, which we closed on December 31st of 2020, that was a DC Metro Northern Virginia based firm. And so now we have an office down there as well. We had a budding practice that was already sort of growing down there. And this was just a great complement to that to give us a real nice foothold in that area to grow from.
Sure. I bring it up just because it adds obviously some more complexity potentially, right? When you have new offices in different states and sort of creating one team, one dream, right? When you're all of a sudden you're going from being local to regional can definitely come with its challenges. And along those lines, the question that I have for you is 3 deals in, what do you know now about M&A that you wish you knew when you first started going through the process several years ago?
Yeah, I would say the number one thing that I wish I knew is that I wish I knew that I was capable of doing this earlier. If not capable, maybe just that it could be done sooner. You don't necessarily have to be a $1 billion firm or a certain size. All you have to do is have the inclination to do so and the willingness to understand all the factors that are involved. That's for sure. That would be the number one thing I would say. You just got to get into it.
Yeah, and it's very true. And it's not for everybody, but knowing that you are a student of the business, you love the business of the business. I can understand why you say that now. And I am curious. So just kind of getting a little bit more general around the M&A activity. We've seen that there have been, depending on the research you look at, 200 or more deals in the RIA and wealth management space annually for the last several years now. We've seen record levels of M&A activity for 9 to 10 years straight now. I don't anticipate that the M&A train slows down anytime soon, especially when you have some of these very large professional buyers that are backed by private equity. I don't know if you go head to head with them directly when you're looking at some acquisition opportunities, or just philosophically, how you think about competing against some of those firms, given how many other advisors might be approaching retirement, thinking about a merger, thinking about a transition. So, I mean, how does a firm like yours, how does a firm like Wealthstream compete with the larger professional buyers of the year, and what do you offer, right, that is unique and compelling to a seller?
Yeah, we definitely do compete with them. There's no question about it. All the deals that we've done have been, sub 150, $200 million. So even though they're that small, these bigger firms are competing, or at least if not the biggest firms, some of the sub firms. If you know some of the structures on some of the RIAs out there, is that there's a firm of firms, and then that firm will actually buy the smaller firms in some cases. So we are competing with them. And I think the major difference that we have to offer is that we're like them, or at least we're a lot closer to them than these other firms are. And they also see that, here I am, if I could be a little bit immodest for a second and just basically come in and say, hey, I grew my practice just like you did. I just decided to make it a little bigger at some inflection point. But I get it. I started our practice from scratch. I feel where you are. I would never say I could put myself in your shoes, but I can understand where you are and how you feel about things. And I think we can relate better. And not only have we been able to do that and come in and make them feel that good about it, is I think we've also been able to probably get better terms than some of these other firms that could probably throw around a lot more money than we would. Or maybe it's not even dollars, it's just the structure, and do it in a way that's even more advantage for us.
Yeah, it's a great point too, because a lot of the RIAs that I've talked to over the last couple of years who are selling, they don't want to feel like they're being acquired, right? Regardless of what the deal terms and the actual structure looks like, they really do want to feel like they're merging with, a firm that has similar philosophy, right? And I think that's what a firm like yours brings to the table that's interesting. Whether or not all the firms that are your size can compete with firms that are 10 times the size may not always be the case in every transaction, but I do think it introduces a pretty compelling option. And with that, I'm curious, I mean, how do you view some of the M&A opportunities that are available to Wealthstream as we're looking out at 2022?
Yeah, I think it's great. I think there's going to be more and more and more of it. The interesting thing also is that the firms that aren't attracted to a firm like ours and are attracted to the bigger firms are probably at the end of the day better that we're not doing those deals, because whether it's culturally or mentally speaking, they're not really looking for a firm like ours. So I don't want to force something that shouldn't be happening. And I do think that this is going to continue to be the case. There really does need to be more buyers out on the universe, because the firms need this solution, whether it's for succession. Most of the deals that we've been doing are really succession driven, but some of them are driven because they need really some talent, and those are other reasons we might do a deal, is for talent or niches or in that last case, a geographic foothold.
Yep. And just a final question on the M&A front. In the last few months that I was at Echelon, so roughly a year ago, I would say first quarter of 2021, I got more calls, talked to more owners, leaders of RIA firms that are somewhat similar in size to yours, who were looking to do an acquisition for the first time. They'd grown largely through just organic growth, strategic growth. But once you get to a certain size, you only move the needle a little bit, right? If your partner can bring in 10, 15 million in net new business every year. And maybe there's a little bit of the FOMO, right, going on with M&A. So with that, what advice would you have for a peer, somebody who's running a firm that's $1 billion, 1.1 billion in assets under management, who's considering making their first acquisition?
There's a lot of things that we could talk about there. I would probably think the number one thing that they should talk about is make sure that their firm is ready for it. Make sure that their people are ready for it, and from a capacity standpoint, probably first your ops team, because it's an initial shock more to the operation side to the team than the advisory. The advisory more kind of slowly builds up, whereas the ops, it's kind of all at once. So make sure you have the physical practice capacity. And then way more important than that, though, is the people capacity. You could destroy the morale in your firm pretty quickly by doing something that's not something that's in line with the team and that they're not on board. I was very transparent from the very beginning with my team about everything that we were considering doing. And even when we were in early stage, a lot of people say, don't talk to your team in an early stage. I completely disagree. I think that the more transparent you are upfront and why you're doing something, the better buy-in you're going to get. So definitely making sure you have that capacity for the team. And then the other thing, which might be a little trite, you might hear this all the time, but it's important. Why are you doing it? Knowing why, being able to explain that not only to your team, but also to the potential seller. Why are we in this? So that's got to be a compelling reason for that. No question about it.
Yeah, and I would add stamina to it as well, right? Especially if you're the one who's sort of leading it. It could be an exhausting process that takes 6, 12 months or more.
Yeah, I'm really glad you mentioned that, because it is, a very intensive period that can last a really long time. And you go sort of these phases, right? So without really having any sort of science or outline around these phases, I would say the first phase is that dating phase, right? And then there's this sort of elation when you get past the dating phase and say, okay, let's see if we can make this work, right? And then you first start all over with sort of a memorandum of understanding, or sort of the general deal terms. And that's a whole push. And while that's going on in the background, there's all these emotions and thoughts and feelings about this from both sides, and trying to make sure that everybody stays aligned. And then there's an elation when you get that memorandum done. And then after that, there's a whole nother buildup of actually getting to the closing date and all the things that are coming about. And now try doing one of these in a crazy market. Where you have that last deal we did was right in the middle of COVID. We had started the dating process pre-COVID, COVID hit, and so add these external forces, and then you close, and then there's a whole nother probably 12 months of just the absorption of going through the transaction. So yeah, stamina is a great term.
Yeah, and the integration part, I mean, that's the whole point, right? That's the work. You have to make it happen.
That's right.
So and through, right, is the key there. I do want to make sure that we also touch on, while you've grown through the 3 acquisitions that you talked about before, you've had some very good organic growth. So I do want to make sure before we wrap that we spend a minute there. We've talked to a lot of different people on RIA Edge about things that have contributed to organic growth, and we're taking market appreciation and investment performance out of the mix. As you look back over the last couple of years, whether it's some of the things that you've done from a marketing perspective or from a business development perspective, what have been some of the key contributors to your organic growth?
Yeah, so I would say it's probably occurred in 2 phases. The first phase is probably what every successful, advisor that's been able to bring in business over the years, and that's that I've been kind of networking since I'm 8 years old. I just didn't know it was called networking, and you're just out there a lot. A lot of people. The fact that I'm a CPA by background has been pretty helpful, because I have so many CPAs that are friends, and I built those relationships. So building a great COI network and just having a good, solid background of people to refer to, as well as taking care of your clients. So that's all table stakes, and everybody knows that. I think the big thing for us here is that building out this second gen of business development folks, and recognizing that a lot of really good advisors aren't necessarily really good people at developing business. So being willing to make a big investment in that. And we went out and we hired somebody that we could bring in to help us. And it wasn't just some sort of typical sales training. It was really somebody who's going to understand our process, sort of help us know what our playbook looks like for business development and the kind of services that we offer. And it was almost more like communication training and investing in that. And it's pretty expensive to put, 5 people plus through a communication training kind of business over a couple of years, recognizing that it's not going to bear fruit in the first year or two. So I think those two things have been a big plus. And then, of course, you'd be crazy if you didn't recognize that we've all been running downhill right now. I mean, the markets and the wealth effect that's occurred has really been a big plus. And if anybody doesn't acknowledge that, then they're being a little naive.
Yeah, and I think you do have a lot of firms that have obviously grown through market appreciation, but they're at a point now, and they have been for the last few years, where they're thinking about, strategically, how do I reinvest in the business so I can continue that growth in the absence of market appreciation. And I think a lot of people have looked at it from a technology standpoint, but also from an organizational design and a human capital standpoint. And I love the way you describe your business development strategy. You use the word process, which I think is important. It means it's scalable and it's repeatable, right? I mean, what you're doing, whether it's with the team you have today or the team you have in a year or 2 years is doing it, I imagine it doesn't or won't stray much from what it is sort of at the core right now. On the subject of that business development process, where are you finding the talent or the individuals who can do those types of roles? I think it's a pretty unique skill set, and there's not a huge talent pool out there. So I'm curious how you sourced those roles.
That's a really good point, Mark, because the concept of the process is what gives people the confidence and the comfort to go out and do that. Because a lot of advisors, actually, I would say probably most of the best advisors aren't necessarily good salespeople, but what they really are people that want to help, just instinctively want to help people, and they love what they do. So if you can combine that energy of, I want to help people and I love what I do, and tell them that they're actually not selling, they're explaining, and just simply following a process to help explain. Of course, you have to go through this education to learn what certain personality types are, that somebody like me is probably ignorant to. I don't see I just instinctively know somebody wants to hear it this way or somebody wants to hear it that way. But other people that are more students of the process will just learn that, and then they'll be in a meeting and it's not sales to them. They're just getting that this person wants to learn it that way, and then they get comfort, because most good advisors are also good students, and they're able to be able to just get champion about what they do.
Yeah, I know. I appreciate that. And I think it's a good piece of advice for others who are out there thinking about not just how do they grow, but if they need to add positions and they need to find talent, ways that they can approach it. Because I'll kind of default to one of the lines that came out of our RIA Edge valuation workshop in Boston last month. It's easier to acquire talent than it is to hire talent in the RIA industry right now. And that is very, very true. So you're building it, which is another tack there. So thank you very much for pointing that out and adding it to the mix here. Michael, before we let you run, are there any other closing thoughts or any other pieces of advice that you'd have as you kind of think about growth, whether it's on the M&A side or organic growth, that as you're looking at opportunities ahead in 2022 would be important for any leader of an RIA firm to consider?
Yeah, I think it goes back into what are your motivations, as we talked about a little bit earlier. I'm in that unique position, perhaps compared to some of the biggest firms out there, maybe not compared to a lot of firms that are like mine, in the sense that, it's not like we have to grow to meet some sort of goal that some other investor has. It's what do we want to do as a firm, and getting everybody on board. And I think the idea that we've always focused on a sort of team first mentality as opposed to ROI or even client first mentality. We're a team first mentality. And I think by making sure that the team's on board, they know why, they know what, I think you're going to, and actually more importantly, perhaps, that they're formulating what the strategy is, and you're just helping lead that process. I think you're going to be way more successful than pushing it down from the top.
Definitely. You are still what most RAs started out as, which were entrepreneurs, right? And
that's
while
right.
You're not as small a business as you were, right? Still in the category of small businesses. So appreciate you taking some time out, Michael. It's always a pleasure to talk, and I appreciate you also just sharing with our audience as much detail and as much insight into your growth as you have here. Incredibly helpful.
Thank you, Mark. It's really been a joy to be with you, and I look forward to our next conversation. Thank you so much for having me.
And again, that's Michael Goodman from Wealthstream, offering his thoughts on his firm's growth. Again, just crossed the $1 billion threshold in 2021. So congratulations. If any of our audience has any additional questions or would like to learn a little bit more about valuation, M&A activity, and just growth in general, we are now hosting our RIA Edge valuation workshops. We'll be hosting them in Boston, in Washington, D.C., Atlanta, and Chicago in the first quarter and the second quarter of this year. And also we'll be hosting our main event, Wealth Management Edge, right after Memorial Day. So for more information, just go to informaconnect.com/edge, and you can register for those events and check out who we'll have speaking there. And be sure to check out other episodes of RIA Edge, where we go behind the scenes with some of the fastest growing and most successful leaders of RIA firms in the wealth management industry. Thank you again, Michael, for joining us here today. And thank you, everybody else, for tuning in. I'm Mark Bruno, and we'll see you on the next episode of RIA Edge. Schwab Advisor Services is proud to support the RIA Edge podcast, and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.